it's really important that you educate yourself if you're going to do this full time. Now, if you're doing this for some fun and kicks, right? That's not a big deal, and you lose $500 and that's the last experience with the market. That's fine too, right? I don't want to be one of those preachy old guys, right? But if you're doing this, if you're trading now, your audience are traders. Trading is a skill. It's developed over time. And if you learn the business that makes the chart move, your life is going to be a lot easier. Now, there are people who trade just candle charts based on support and resistance or whatever, and that's great. And if you are disciplined and you use stops, you can be profitable that way too. But if you have a little bit of knowledge about how the system works, it'll really help you from trading at the wrong time, that sort of thing.
Welcome back to the Steady Trade podcast. Boy, are we excited to have JJ Gorilla from Confessions of a Market Maker with us again today. Thank you, JJ, for coming back so quickly after our last 24,000 viewed episode with you, one of our highest viewed episode of all time. So thank you, JJ. So happy to have you back. I'm Kim and Curtin. This is Stephen Johnson. We're here with the Steady Trade podcast, giving you guys information that you need to have, that you need to know. And JJ is educating all of us in one fell swoop. So thanks for coming back.
My pleasure. It's great. You guys, I really enjoyed being with you guys last time.
And JJ, how insane, like obviously the interview was insane, but how insane has the market been since you last came on?
You know what? As an old guy, I've been waiting for something to shake this system up, right? Wow. And agree or not agree with what these kids have done, they shook this thing and broke it. And I'm really happy they did, because I think retail traders are completely underserved by the technology in Wall Street. And things like not being able to sell your stock, that's criminal. That's like working in a Sopranos mobster boiler room, right? People, you can't do that to people. You spend some money on from infrastructure, you guys, you're making billions every year, right? And so you're not raping your retail clients, right? I think it's great. I think this is an amazing time. I love it when finance goes through historical periods. This is crazy and it's fun.
And it's interesting you said break. Like, do you feel, there's some people who are like, oh, it'll all come down in a couple of weeks, but I don't think so. Do you think so?
No. The clearing system is built to withstand stresses of capital that are insanely huge, right? This did cause a problem, right? Yeah. This did cause a problem in clearing and settlement, because these people, what they do is, the thing is, what I used to do by shorting a stock for a client, holding it down so they could finance the company, they still do that now, right? They realize that all these CEOs, they're not choir boys, right? So even though the hedge funds are pretty bad, the people who take your investor money and run companies, let's just say they're not hurting, okay? They use investor funds for, let's not forget, what's his name, Bernard Ebbers and the $6,000 shower curtain, right? They're taking investor money and they're basically wiping their butts with it. And they're not being fiscally responsible. So hedge funds short their stock in order to get a good price, because they know the CEO is going to blow all the money, right? When they give him money, right? So that's what happened. And then these hedge funds probably got caught, because I saw Jeffries did some sort of an offering on this thing right around December 5th. There was something filed for about $100 million worth of paper. So they were pre-short that financing, which meant that's why they had short interest, because these guys aren't going to short naked. They're going to short when they have supply. So the only reason you short a stock with size is because you know that you've got supply coming, right? And you have the sophistication and the funds to hold that short. This time, for some reason, somebody got a hold of this stock, right? And lit the fuse, and all hell broke loose, and these guys got caught with their pants down in a clearing firm debacle, right? And it's just the only thing I worry about is somebody is selling into all this buying, because the stock's trading at 106. If there really was that big of a short position, we'd be $1,000 bid right now. Somebody is pushing stock from a long position into this. And it's what I don't like about that is, why doesn't the company come out and show us their DTC sheets and their dead file from the transfer agent if there has been such a transgression? I don't see anything like that coming from the company.
And when you said company, who do you mean?
GameStop. Right? If they were truly being taken to the cleaners by naked shorts, they would show their DTC sheets, which show the securities position in the depository trust, where all the banks show their position. And they would also show the dead file from their transfer agent, which shows every stock certificate ever issued to every shareholder. And it would show exactly where everything is. And it's the ultimate disclosure. And of course, public companies don't disclose any of this.
But can't GME just do why hasn't GME just done the biggest 4215B, 4215B
Exactly.
or the shelf? Why haven't they done the biggest funding ever and made the company a digital platform? Like, I don't get why they haven't done that with that price.
I don't get it either. I think somebody's selling stock, and I think they're going to walk away from this thing. And
you mean someone from GME with a ton of stock is just selling it, getting rich and walking away?
There's got to be. There's no way that you could put that much buying. This thing traded $8 billion like water every day.
But I mean,
there's no way. No, it doesn't matter what the float is. If you put in, listen, I get paid $200,000 a month to do short squeezes, right? So I kind of know what I'm doing. I'm the mechanic, right? If you put the kind of buying into this stock that they've put into it, and there was nobody selling it, we would be $1,000 bid, right? The mechanics of this, see, the whole thing about Wall Street is CEOs and people who are company insiders, right? Who are total greed heads, right? Let me just put that out there, right? They never, ever admit they're selling. They always blame the short sellers, right? And if they're lucky, they get people to believe their story and take up their cause and bum rush the stock like what happened. But these people are getting filled at $400 a share, and it's 108 bid, right? There's something fishy here.
So you think that maybe a lot of people in GME are buying the stock up and then buying it early and then selling it when it's higher?
Or
they had a bunch of it and they're almost involved in this from the beginning or something like that.
Here's the thing, okay? 20 years ago, what my job was, I fed orders to market makers. But my job was, say you, Kim, and Tim take a company public. My job was to create the market for you to sell that stock into. So you guys each had 50 million shares, 150 million shares. My job is to take the stock from $1 to $5, and then you guys can liquidate into the buying, right? Get an average of 10 cents, 20 cents on 150 million shares. It's a good 3 weeks work. So I create liquidity. So, the thing is, you cannot depress the price of the stock with the rules that they have in place, with the kind of buying that they've put into this, right? There is not a breadbasket in the world big enough to hide that short position.
Yeah.
So, we know why the short got started, right? Because the hedge funds were lazy and greedy, right? The company, should have done an offering had this been legit. This is a company in bankruptcy, and this was the perfect way for them to exit.
Yeah.
Right. So I just think I don't like it when people get screwed over because, they make them think, oh, we're getting taken advantage of. They come running to the rescue. And I mean, they're getting filled every day. Like, this thing is down from what was the high on this? Almost $500 a share.
510, I thought it was hot. Wasn't it 510, 518?
But can it be a question that they're not getting the right price or something like that? Or people don't want to invest in them, even though the stock price is so high, because they just know that it's bankrupt.
Yeah, that's definitely, that's common sense, right?
Can they not raise? Is it that they can't raise? Is that what it might be?
Well, I just saw, they just did if you look at their last SEC filing, they put something out. It was Jefferies was trying to raise them $100 million, right? Or something like that. So they
And
were
when was
doing that
that?
in December. Pardon me?
Oh, that was December. That was in
Right?
December.
That was in December, right before this all happened. So I'm wondering whether or not that financing, I haven't really read the filings, but I know that these public companies issue shares for debt, right? That share debt that's convertible into stock,
Yeah,
right?
yeah.
And what they do is they're floorless sometimes, or they're reset based on VWAP and things like that, 14-day VWAP. So,
Yeah.
somebody got stock at a really, really cheap price, and they're blowing it off into $500 volume.
Yeah.
There's something fishy going on here, and it's more than just the hedge funds. And listen, I've been doing this so long. I know the people on the other side who actually take the thing public and create the product. I mean, as soon as you give a CEO a big chunk of money, it's gone. They're not, in this day and age, people who run companies are not fiscally responsible, right? It's not like the old days at Bear Stearns where Ace Greenberg was counting paper clips, right? These people spend money like it's like poop going through a goose, right?
But
So they're always raising money and diluting the capital of the shareholders.
but would you not argue that with people like you who can create maybe not create the
Yeah,
story, I'm not sure, but create the story, create the liquidity, increase the demand, and just
yeah,
print a bunch of money, would you not argue that CEOs got like that because of this system? Or
yeah. It has the system. The thing is, people who finance these companies take a risk, right? So they need to have a reward, and the IPO is the exit strategy for someone who invests in a company, right?
yeah,
They're exiting into the retail flow. But what has happened is, because interest rates are low and people run things loosey goosey, you got what, Uber losing $4 billion a year, right? They take that public and unload it onto shareholders. And I don't think there's anything wrong with people making money trading this. If you bought this GME at $10 and sold it at 500, I applaud you, right? I'm not one of those old guys who gets mad when young people make money. I think that's when you're supposed to have money, is when you're young. What the hell good is $70 million when you got a walker, right? Let them party, let them have fun. I think that's great. I just, when my spider sense starts tingling, man, like I look at this thing and there is something really fishy about this company.
Walk us through, JJ, when this was all going down just a week ago. Walk us through what you were thinking as you were seeing it, inclusive of Robinhood and what was happening, on Wall Street Bets.
See, what I was thinking was, I came up with a plan 20 years ago to bring liquidity into companies. And usually we started with direct mail, then email, and blah, 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 to like get investors in, right? To bring in the buying, right? So my job was always to bring in buying. And I always would say, listen, if we could get 5 million people to buy 100 shares of stock at $1, and you're selling it, do the math.
can I,
Right. That's exactly what happened. We had all these people coming in, taking small positions, and it created the liquidity event of the century.
But is that what you're doing? So, like, say, for example, I had a company that was just like Stevens Newcastle UK
Yep.
whiskey, and I was about to go public, and I hired you.
Yep.
So, what's the process that we would follow? What would be your
Okay.
role?
Oh, okay. Well, nowadays they use something called a SPAC, right?
Yeah.
Which is just a fancy shell, right? So if you came to me, I'd go to my buddy, the Golden Bear, and I'd say, listen, Dougie, I need a shell, right? Now, if you had money and people willing to put up money, we would buy the shell for cash.
Yeah.
If you didn't, we'd do it for equity, and Dougie would still keep some paper, right?
Yeah.
So we do a reverse merger by filing an 8K. We'll incorporate you in Nevada, right? And then take that Nevada company and reverse merge it into the shell, right?
Yeah.
Then we take a market maker and have him file a 15C211 to represent the stock, right? And that's if you are a brand new listing. If you have a shell, I'll get one of my boys. I'll put all my market makers in the stock. So every market maker in that stock is controlled by me, right? Then what we have to do is we got to dress up your company. So now we sit down and we write out 10 news releases,
So that's hiring like an investor relations firm, or are you sitting
Well,
there typing
investor
these?
relations firms, investor relations firms are phone chips, right? We call them phone chips. They don't really, they're there for window dressing, but you need somebody to move the paper, right? You need salesmen out there getting people to buy the stock, right? Glengarry, Glen Ross, you need the Glengarry leads, right? So what we need to do is, in the old days, we'd hire a phone room, right? And we'd get like a boiler room on the stock, give them a 30% chop, right? So every share they sell, they get, a third of a share offshore, right? So you pay these guys. There's a huge trading room that's out of the middle of North America that was started by a stock promoter because he built this trading room to teach people how to trade, but they're just buying his deals from offshore. So you create the liquidity, and what the internet has done and what Twitter and all the social media has done has allowed people to create liquidity without spending any money.
Yeah.
Right. And that's what I'm afraid of, because I look at the way this stock trades and it's not trading the way it's supposed to trade. Right. There's something very kinky about the way this stock trades, and it's not kinky because the funds are short. It's kinky because somebody's selling into the buying.
Yeah. No, it should have gone higher. Basically, what you're saying is based on the volume, it should have gone higher.
This thing should be $1,000 bid.
Yeah.
Right. Look at the volume. Somebody's puking paper into this thing, and they're taking advantage of people who think that the company's hard done by. Right. And
but the company's what?
Hard done by. Right. That the company's a victim.
Yeah.
Right.
Yeah.
Pull the CEO out of his let's see how the CEO lives. If the CEO is living in a 1-bedroom apartment, taking the subway to work, right, on a very tight salary, maybe.
Yeah.
The guy's driving a brand new S-Class, living in a 5,000 square foot house.
Yeah.
I mean, how amazing would it be if someone like someone like you spoke to GameStop and said, "I've got the best idea for you ever. Let's create this story where some people on Reddit in Robinhood made this plan that effed up the hedge funds. Meanwhile, while everyone's talking about that, we're going to sell and sell and sell and sell everything." That's
talk about a deflect, a major deflect.
But see, the thing is, the people in my industry are just exactly that evil.
I love it, Piss. I love it. Sign me up.
It's it's just it is these people. I mean, listen, I had a guy who made $7 million in a week, and he screwed the guy who painted his fence out of $1,500. Right? They're listen, I was a bouncer in a nightclub. I've dealt with Hell's Angels, Russian Mafia, all of these people, and they have more scruples than stock promoters.
Oh my God.
Okay. Right.
So what's the likelihood of Steven's scenario? What he just said about this is almost a distraction with Wall Street bets and the hedge funds. What's the chances that is actually the real story?
It's unfortunately pretty good.
Wow. That is crazy.
Because you know what? When you see $8 billion going across the tape, that doesn't happen. Like, that's just not a spontaneous event.
Is anybody talking about this, JJ? Has anybody talked about this side of it?
No, nobody talks about this because it sounds like tinfoil hat conspiracy theory. But because I used to trade for these people who did this, and they would hire me to set up the structures and set the traps and do all that sort of thing. That's why I know. And I saw this and I was like, oh God, they did it, but they did it really, really big. And what I'm scared about, and honestly, I swear to God, because I had a crew of young guys that I trained right after 9/11. And I trained them and I taught them everything I knew. And they went out into the OTC markets like a virus. And it was like I created freaking COVID. And these guys, they stole about $6 billion, right? They did about 10, 12 deals. These deals would trade $300 million in dollar volume in a week on an OTC BB stock, right? And they took all that money and disappeared. Nobody could find out who they were. And I know it was them because all I have to do is look at the level 2 and how they're trading. And it's like Jesus Christ, I taught them how to do that, right? And you just cringe. And what I'm afraid of is that those guys were involved in this, right? It's just because I see certain things and I see because what their favorite thing is to create a huge scene somewhere. And then while everybody was focusing on the scene and the drama, they had their hand in everyone's pocket.
That's the ultimate con, right? The con game is all about creating a distraction over here and then doing this quickly on the side where everybody's focused on that traffic accident.
Now, I really hope I'm wrong. And I hope these guys are, holidaying in Outer Mongolia where there's no extradition, and they're not involved in this, right? Little bidwhacker, I hope that's not you out there. For God's sakes, I hope you didn't do this. Shit. But, if you can hear me, you know who you are. But I'm telling
JJ's on to you. What could you even do about it? Like, what could anybody even do about that if that is true?
Nothing. The thing is, I have never seen the SEC halt a company for fraud that is a NASDAQ deal, right? One of these days they will, and it's going to hurt people because they halt OTC companies all the time, and they halt them for 21 days, and you have to reapply, to get listed and stuff like that. And these NASDAQ deals, they don't seem to halt them for any kind of fraud. So I don't know if they're even looking. Let's not forget this is the SEC that let Uncle Bernie get away with a Ponzi scheme for decades. So, I'm not sure if they're even looking at this or even care.
Yeah.
But, the thing is, what I'm scared about and what we teach people in our room how to trade, we try and keep them away from this kind of thing, because these kind of stocks are like, you're walking down the street, you got $1,000 in your pocket, in your hand, everybody can see it. Are you going to walk down that dark alley where there's like drug dealers going to knife you, or are you going to walk down Fifth Avenue where it's nice and clean?
Yeah. For sure.
Because what I'd hate to see is this thing get halted and then people are screwed, because when it opens in 21 days, it'll open on gray sheets, right?
At a very low price.
Well, and then it's run by a guy like me. Yeah, I'm $2 bid, $10 offered. What do you want to do? And it's just heartbreaking.
One of the questions that was asked me, suggested I ask you, and it ties into what you're speaking about. Sure. Maybe the answer, you've already given me the answer, but how is it possible for 121% of GameStop's float to be short? Is the company lending shares?
Yeah, what they've done is somebody has a stock, has a financing against this thing, and they've pre-shorted it.
So right? It's pre-short.
Yeah, it's pre-shorting, and I would say people, and what the thing is, usually if the company tells the financer to go pound sand, like get away from us, right? That guy is short. But 9 times out of 10, they can bully the stock down, right? And beat the thing up enough that they can cover their position, right? But sometimes they pick the wrong banana to peel, and in this instance, the street took the stock, and the buying that came in, there was just no way they could control it or hold it down. It's like trying to, close a suitcase that's overstuffed, right? It's just not going to happen.
Can I just ask you about OTCs? Because I was quite surprised when OTCs came to life in the last year or so. Like OTCs were big like 10 years ago or 8 years ago, whatever. Then they went quiet. Like, what's with this resurgence? Is this people like you putting liquidity into them, or because the trade's smooth? They don't trace the trade's smooth in and out. There's not chop.
Do you know what's happened is that larger players, the reason why OTC, the business stopped 10 years ago, is because the people who did the deals were not able to clear the stock and get it into the DTC system, right? So what the regulators did 10 years ago, they said, look, like the guys that I unleashed on the OTC market that I created, they realized, look, these guys are stealing like $1 billion a month, okay? So we got to shut this down. So guess what? If you have a stock certificate from an OTC company, no brokerage firm in America will touch it, right? So what happened was now is in this day and age, because there's so much money out there, you have sophisticated players like hedge funds who have what we call prime bank accounts, prime brokerage accounts, that will clear that stock. And that's why you're seeing better price action in OTC markets and probably higher dollar volume, because you have sophisticated players in there. If you want to take a look, there's an article about a year ago. There's a bank called BNP Paribas, and they laundered about $1.2 billion worth of worthless OTC stock through their prime banking for funds, and allowed people to deposit crappy stock and sell it into the United States system. But it was funds, because if you're giving your prime broker 10 million in commission every year, they'll clear whatever the hell you tell them to clear.
Jeez.
No,
right.
It's...
A prime brokerage bank account is like, it's like the VIP room at a strip club. You get so many perks, right? You know, you had Turney on there, right? Turney was the best.
We just had Turney.
Turney will tell you everything because he was on the buy side. They wined and dined him and took them on private jets here and just spent god awful amounts of money, like, money that would make, Khashoggi blush, they would spend on these guys. And so it's just the business. I mean, this business is something, the dollar amounts that are going through now are scary as hell. And it's just, it's a question of, I really think people should really, it's okay that we had the Reddit guy on our podcast, and he said, you know what, these guys, $500, I buy $500 worth of stock, I'm willing to lose it. It's like a YOLO, lotto or something or the other deal. And I didn't know what YOLO was. I typed it in as a stock symbol, right? YOLO. You give me 4 letters, and I think immediately, I'm a trader, right? It's YOLO.
That's cute. That's
right?
great.
I had no
That's
idea.
Great.
Right?
That's awesome.
But just a couple of things. So, like, people are saying, like, how is Wall Street going to strike back? But from what you're saying, it sounds like kind of maybe Wall Street are in on this. I don't think Wall Street are in on this. Those hedge funds blew up, right? But I mean, are the hedge funds going to strike back then, or is there a way they can strike back?
No. Look, they just lost. They just lost a round in a fight. That's all.
Yeah.
Yeah.
And look, Cohen went and raised $1.5 billion. Right. Yeah. See, and this is the other thing you guys need to know. When Wall Street hedge funds blow up, you know what they do?
Let's get more money. Get funded.
No.
Create a new hedge fund.
If you're a hedge fund guy and you blow up, you take a year off and you take your wife and you go to the south of France, right?
And you come back
and you hang out on some beautiful yacht, right? And you eat nice meals and drink beautiful wine, right? And you chill. You come back and your prime or another prime broker will raise you $900-800 million, and you're off to the races again. It's OPM. It's other people's money, right? And when you trade other people's money, these people, it's a job for them. They get their 2 and 20, right? They don't have an emotional attachment to you.
I was really thinking that, like, what's your opinion on, like, the hedge funds trading versus, like, hedge funds easier because you can kind of work with each other, but you're not trading your own money. Like, it's tough trading your own money. And if you don't have a lot, it's even harder when you don't have a lot, because you're like, if I blow this up, I might have to get a job next week.
Well, here's the thing, right? I tell people the difference between retail trading and institutional trading is in retail, you can't cheat. Right? So, which makes it infinitely harder. Right? How do you think I could roll in on the trade desk after being out till 5 a.m, half cut, right? Still wearing the clothes from the other night, and make $100,000 that day?
Because you can just call in a favor and say, like, I'm really hungover. Can you just do this, and then I'll do this, and then I make money. Yeah,
exactly. Right?
That was like, how are you guys doing it?
Money, right?
When I hear the drug stories, I'm like, how are you guys taking drugs and drinking?
Well, I wasn't a drug guy because I had doctors in my family, and they said if you do cocaine, your heart's going to explode and you will die. And they told me that when I was 5. So I was always scared of coke. Right? But the drinking and, all that hard living, we would just roll in, and, it'd be like in Vancouver, you started at like 5:30 in the morning, right? So you basically were out till 3 a.m, and sometimes if you were lucky, you got home, took a shower, and you're at the trade desk throwing up in a garbage can, but
It doesn't last that long, Stephen. I mean,
no, it doesn't last that long.
You burn yourself out, and that's Turney's
Yeah.
story. Like he had a good run, but then he couldn't escape it, and he had to walk out.
Yeah, and the other thing is Turney. This is how he made money. Ring. Jeffries is upgrading Amazon. Click. So you buy 100,000 shares and it runs $5. I mean, all deference to my boys and girls on the other side of the street, but that really doesn't take much skill.
Oh,
right. Somebody tells you, the thing's gonna run. That's just front running, right? It's like me when I was at the firm. You get a phone call on your cell phone, of course, and oh yeah, Yorkton's got to sell out on ABCD. So you go there, 2 million shares are going to hit the market because the client didn't pay for the stock. So you go sell 20,000 shares short, and their sell order knocks it down.
But can it be as simple as you're friends with Amazon or whoever, and they say, I'll make a deal. You tell me when you're releasing a product announcement or a press release so I can buy your stock before it. And in return, I'll short the hell out of your competitor with me friends and drive their price down.
Oh, stuff like that, I'm sure has happened. The things I have seen these people do, when you have those large amounts of money on the table, dear God, some of the stuff I've seen, it's just like I've seen brothers take each other down for $10 million, like family. Wow. Right. Yeah, there was one promoter and he stuck his brother with like $6 million with a bad debit. His brother was a broker. He bought $6 million worth of stock in his account and didn't pay. Right. Like.
All right. Here's another question.
Go ahead. Yeah.
What happened this past week with liquidity on certain securities? Do you think there were other hedge funds jumping in with the Wall Street Bets crowd?
Oh, definitely. Definitely. There was blood in the water. Right. We are not nice people. We'll drink with you, but if you're in trouble, we'll go for the jugular the next morning. So as soon as somebody knew that, that was like throwing chum in the water, right? Yeah. You get these other hedge funds in there just, like taking, I'll buy 200, I'll take 4/5 of that and I'll take 2/5. And they just, they will jump in. That's why things like level 2 and order books are useless, because if you ever show your size as a trader, right, we will come and pick your bones clean. No trader ever goes, I need to buy 1 million shares. Here I am. Right.
Yeah.
I got paid if something traded $100 million worth of stock in a day. My job was to come in, take $30 million out of that market, and for you to not know that I'd even been there. Right. And that's what a good trader is on the other side.
What's the recipe there? Is there a recipe? Because I'm sure there's a bunch of stocks where the promoters are trying to get them up, they're trying to get the attention, and it just doesn't come, and then all of a sudden they just have to dump it on themselves. So what's the secret of getting the liquidity? Which is your job? How do you do your job good on a day?
Okay, all right. To get liquidity, the best way to build good liquidity is to take your time. Right now, slow, right? What you do is, if you have a public company, the best thing to do is get like 4 people who have good sales training, who have never been stockbrokers or been in the business because they don't have any bad habits. And then you train them, right, to communicate with new shareholders on a daily basis, right? And you build that rapport. And what you do is you get about 4,000 or 5,000 retail shareholders to own your stock. And then you spend some money on a promotion, right? And what that will do is, because your stock is spread out over a nice big shareholder base and not one person owns a whole bunch, right? Then when the street comes for it, those shareholders will start adding to their positions, and then that frenzy will build, right? Now, I have a client who used to do that all the time, and he made close to $1 billion doing it over his career, and he started in the phone room of his brokerage firm. So, but the thing is, the other thing too is, don't do pump and dumps. Take 2 years to build the company. And then at the end of it, you'll have $180, $200 million in your jeans, and you'll have made your shareholders money. And the next time you do a deal, you'll have people lining up to buy it. Because you know what you do? You tell people, look, I'm going to put you in at 20. I'm taking you out at 50, right?
Yeah.
Right.
That's
And
it.
that's what we used to do, right? And you build that, and they're there the next time, right? It might go to $2, but look, I want you to make sure you get out at 50, at least what you put into it, and then some, right? Let some ride if you want. And if you're like that with your shareholders, and you're like that, and you build it, they will come.
But I mean, that's pretty easy to do, though. It's just because you can say, look, I've got this massive, massive marketing scheme and promotion. I want you to buy it first.
Yeah.
And then the
It's
suckers
gonna
who
take,
buy it when
yeah.
it picks up, they'll be the one who get dumped into.
Yeah, that's really how it works, and then that last leg of retail is the one that we do the musical chairs with.
And when you engineered a short squeeze,
Ooh.
just tell us like the mechanics behind
a
it.
Short squeeze, when you engineer a short squeeze, now I don't know if you can do this anymore, because the last one I did was around 2000, 2001, and unfortunately it took down a couple of clearing firms. That wasn't my fault though. But here's the thing: you restrict the amount of stock in DTC. So what you do is you put some stock into the system.
What's DTC?
The depository trust system. That's
Yep.
like the vault for all of securities in North America, in U.S. markets. And then, there's a nominee for them that owns all the stock. Where actually, if you have 1,000 shares of Amazon, you don't actually own the stock. It's owned by Seed and Company. Nobody who actually owns stock. You have a contractual.
Is that the payment for order flow?
No, that's different. This is
Okay.
clearing.
Sorry. Keep going. Sorry.
No problem. So Seed and Company owns all your stock, and you have a contractual agreement with your brokerage firm, who has a contractual agreement with their clearing firm, who has a contractual agreement with DTC and Seed and Company, right? So I might have missed a couple of links in that chain, but if you own 1,000 shares of Microsoft, you don't actually own the stock. It's a very weird concept, right? And
weird.
One thing I used to always say, and I've been saying this for decades, if the public ever found out what the hell we really do, heads would roll. And
Did you know that, Stephen, that we don't really own it? The stock?
I mean, look, I'm a day trader, so I don't even think about it. I don't even think that there's a company behind it. I just see a 4-letter ticker, and I don't think further.
Exactly, right? And
I don't care, right? I just can't make the money.
Speed dating, right?
Yeah.
Because you know what? Being a shareholder, sometimes they'll break your heart, these companies, right?
Yeah.
It's because their thing is to get you to buy it and hold it, and they'll tell you anything that, will make you do so, right?
Yeah. Yeah.
So that's how the clearing system works. So what we used to do is we deposit some stock into the brokerage firms, and then what we do, and you'd have an investor deposit some stock at a regular brokerage firm, and then you trade the stock using what we call delivery versus payment accounts in the old days. So, and that's an account where I buy 1,000 shares of stock, and I have the cash, and that cash has to be delivered versus the delivery of those shares. Now, if those shares don't get delivered, you can kibosh the transaction, or you used to be able to hold it up and cause a problem and get a buy-in, right?
Yeah.
So we would use little tricks like that of the clearing system, and that's just knowing the plumbing. Now, I'm sure the regulators have changed everything, so everything's on the up and up. Yeah. But since my days, but we used to do things like that, and that's why I once had a company where I had 4 million in the float and a 5 million short position against it, right? and the reason we did that, because the short position is like a kickstand on a bicycle, right? It holds the price up while you wait for retail buyers to come. See, because I had to hold the stock at $30 for 3 months so they could get a financing from $100 million, right? In some sort of credit line or something. But the floor was 30. If the stock broke 30, they wouldn't get the money from these people. So they're like, how are we going to do this? So the next thing you know, I'm being flown to New York on a plane, right? And I'm sitting in front of somebody very, very scary, who used to sell Exocet missiles and French fighter planes. And, and it was his public company. And, I told them what to do, and they did it. And, And it worked. You know, I held that stock at 93 RSI to 97 RSI for 3 months.
But you were saying that was short though. But how would you hold it if it was short? You must have been supporting the bid, no?
Yeah, you support the bid, but you don't need any money to support the bid, right? See, if you take all the supply out of a market,
so no one can short it.
Yeah, you just need to breathe on it, and the price will go up. Once I saved Bank of America a $30 million margin call by spending $1,700. I took the stock from $5 to $8 in an afternoon using 2 cell phones off a subway platform in New York because I had all the supply locked away in my client's desk.
But what if Wall Street Bets found out that you had all that big short position? Couldn't they just blow you out of the water?
Oh, if you know what, these kids, if you piss them off, God knows what they'll do.
No, but
right?
say you're short the entire float because you need to hold the stock at $30, and so you take all the liquidity out of the market. What happens if Reddit find out and they buy everything? Won't you just go bankrupt?
No, because I've got the stock, I've got the supply. I'll just deliver. If they rip the stock, you know what? If I had the stock at 30, and they, for example, thought that the company was being taken advantage of, and took the stock up to $200, and I had 20 million shares, I would dump it into the market, and I would buy them all, you know, dinner at Ruth's Chris.
So you would just dump the position or whatever, and it will go higher.
I deliver, right? Because what they're doing is when you take a stock up, you're creating demand, and to introduce supply. They would be like, I would be hugging every single one of those kids.
So it works either way,
right?
It works every way.
You know, that was my dream, to have what happened in GameStop happen to one of my deals, right? Wow. Do you know what it's like when you're sitting on a stock and you actually run out of stock to sell? It is the most beautiful thing in the world, right? And then the street just takes it, right? It's like building this beautiful boat and watching it sail off into the sunset. And you've got $30 million.
How many times do you get the dream situation where a stock just catches fire and it trades millions and millions, and you're just shaking your hands thinking, I've done a good job, yeah?
I had it once in one situation for one of my clients, and I was really happy because it was his comeback deal. He had come back from bankruptcy, and he was almost homeless. And you know, and he put this deal together, and we ripped it from 3, and at $12 he was out of stock.
Yeah.
Right. He had sold every single share, and the thing ran to 20, and it actually bounced around between 20 and 30 for a while. So the people who bought it afterwards even had a clear shot of making some money. Yeah. But you know, that was nice. Do you guys ever remember a company called True Religion Jeans?
Yeah, sure. Yeah.
Right.
Yeah, talked
that
about
wasn't my deal. This was another bouncer that worked in another bar in Vancouver, who took this thing public along with a Swiss banker. And that thing traded, and it got NASDAQ, and they created so much liquidity, and they both made like hundreds of millions of dollars, you know, just amazing amounts of money on that deal.
Jeez.
Can I ask, because you have your own room, right? Can I ask, you knowing all what you know, what advice do you give to the new members that come in on how to trade?
Good question.
Great advice is take it slow, learn the business. There is a business that is creating the chart. The chart is the reflection of business transactions that are taking place, just like a sales chart, right? If we're, you know, at a sales and marketing meeting, we're looking at a sales chart. It's reflecting the business that's going on. If you learn a little about the business, then certain things like choppy markets, FOMO, all of that stuff kind of disappears, because you're like, oh, they're doing this right now. I'll have a coffee and wait until they're done. Okay, they're ready to go. We're ready to trade. You'll avoid that gap and trap in the morning, because you know that what we're doing is we're cashing up our box by gapping something, selling into it, taking your money on the downside, and then taking it back up.
Can I just ask as well? It's such a good question that you've reminded me of. Like, as a short seller, you guys don't dump in the afternoons, do you? You dump in the morning into the liquidity. Is that right?
Yeah. Well, not as a short seller, but selling from a long position.
Yeah, that's what I mean.
Yeah. Because you know, yeah, exactly.
Because like as a short, like I'll see panics in the afternoon. Like I saw one on ZOM. You saw the Carol Baskin thing. That's the biggest pump of all pumps. I couldn't believe it.
Oh, really?
ZOM. But that panicked
Yeah.
in the afternoon, shorted, and then they ripped it back up, and then it dumped in the morning.
Yeah, that's an inventory correction. The afternoons we correct inventory. It allows market makers to correct their inventory.
What does that mean?
Okay, inventory is the most important thing in trading. Every market maker has an inventory for every different stock, and they have different order routes that come from different brokerage firms. So it's like their order book. So like E-Trade, I've got 100,000 buy orders and 10,000 sell orders. How do I match these up against what I've got in my inventory? It's like a storeroom for stock.
Okay.
Right. So when markets go up, and they usually trend, like when they gap and then they come back down and then they'll trend, right? And then they'll correct, they'll dump. You guys say it dumps in the afternoon, right? That allows, what that is the market maker will sell short all the way up to retail, right? After the dump in the morning, right? Right. We'll let that, we call it feeding the ducks and leading them. So we're bringing the retail up and we're letting the market makers sell short to them. Then what he does is he pulls his bids and drops the market, and they'll panic and dump out. And that allows him to cover his short position, right? Because he's shorting to retail as a function of his business model, right? Now, if the people who are running the deal are smart, they'll fill him a little bit and then let him get short again and take the market back up, right? If they're greedy, they'll sell into that dump, and then that's when the price completely collapses, and then it doesn't bounce, right? But that bounce too is another nice thing, because that bounce does two things. One thing is it takes out some of the overhanging supply, right? Because it flushes people out. The other thing too is people follow the price down short.
I did it. I do it.
Right? Right. And that is a beautiful tool. That's like, because what it does is it cleans out the inventory, and then it also creates another very handy short position. And we use that short position as leverage to push the market up so we can sell more.
But I don't get it, because you're trying to keep the price down. It wouldn't make sense, because you're saying
no.
Someone shorting and then covering in the afternoon to get out.
Yeah, and that afternoon cover where people follow price down, right? And they get, and it's always, and it's happened to me as a retail trader. So I'm not making fun of everybody, because it's hard to see unless you're doing it on the other side. What you're doing is you're dropping the market to flush out all the longs. You buy back all their paper. The market maker gets to fill his short. Then the other thing is people now are short at the bottom of that move.
To squeeze
now
it up.
What you've done is you've created three sets of buyers, right? The market maker covers his short, right? He's the wholesale. The short sellers now have to buy because they've sold, right? And now you'll get momentum longs coming in. So you have three sets of buyers and no supply.
So the market maker's only going short just to dump it at the end of the day, just to pull off that move? Or why is he short during the day? Just to pull off the move?
Because no. The market makers have to short to you as a function of their business. See, everybody really doesn't understand. I'm so surprised nobody knows what a market maker does. Right?
Now's the time.
They think that they short, right? Indiscriminately, or because they're trying to beat up a company or whatever, these games. They don't. The only time that a market maker shorts is when they run out of supply and you're buying. See, a market maker provides liquidity. If there was a stock that was $5 by $5.25, and there was no market maker, and you went to buy 1,000 shares at $5.25, you might get 100 at $5.25, 100 at $5.30, 100 at $5.40.
Yeah.
Somebody has to sell you that whole block at $5.25, and they will short it to you, right? That's called shorting to retail, which is a job function of a market maker. That puts them at risk and allows them to make money by buying it back on the bid. That is the business model of the US capital market. They pay for the order flow from the brokerage firms. It's like a tailor buying material from a mill to make suits.
But they make money because they're making money by creating order flow, but then they also make money when they dump the price.
They don't create the order flow. You guys create the order flow.
But they sell,
right?
they sell to us though, right?
They sell to you as a function of filling the order.
Yeah.
Right? Think of them as handing you the donut. Right? That's all they do. Right? The donut gets made by guys like me who take the company public.
Yeah.
Right? Now, when the market goes up really quickly, they don't have any supply and inventory. So they have to short it to you. Right? And here's the thing, right? The market maker has to buy and sell from you because they have a contract with your brokerage firm. They pay for that order flow, right? But it doesn't say where they have to buy and sell from you, right? And it's a business. In the old days, they used to call them floor locals. They would provide liquidity, right? So that's what providing liquidity is. Otherwise, if you didn't have market makers, stocks would be 5 bid, $10 offered. You could maybe buy 100 shares at 10 and the next offer would be 15, right? So what they're doing is they're bringing in all of this order flow and matching it. And that's where algos come in, because in the old days, a market maker would make a list of 30 to 300 stocks, and they had to have this all in their head. Now you have algos. The business model hasn't changed, but the algos make it easy because they execute. And they keep track of your inventory. They execute. They know where all the orders are coming from. Now you have artificial intelligence and all this cool, sorcery that makes the market maker's job so much easier.
Is that where the payment for order flow that I was asking you about comes into play? So can you just talk a little bit about that? I've heard it. One of my clients actually spoke to it yesterday. And then I heard it even with Howard Linson, did a conversation about that. And the heart of it that blew me away was that payment for order flow was created by Bernie Madoff.
Uncle Bernie.
What the hell, man? How is it that we still have him imprinted all over our fucking finance world?
That man, I met that man when I first started trading. The very first security traders convention I went to, Bernie Madoff was there. Wow. And he was like, he was like the king there, and I was the rookie. Mm-hmm. And it's funny because my buddy who ended up being a head trader at Raymond James, we were both there, and this guy's supposed to be the respected guy, right? And I think Burke Murphy from Sharp was there, and a couple of the other guys, and my buddy who was like he was just a knucklehead. He just turned around and he goes, "So, where are all the trader groupies?" And I'm like, "Oh my God," And see, we thought Bernie was this like respectable dude because he had Madoff Securities, MADF was their thing. He was not a very nice man. I mean, he just basically shook my hand and kind of piss off kid kind of thing.
Yeah.
Everybody was like, he was the grandfather of the NASDAQ and all of this stuff, and he created this payment for order flow. And that payment for order flow, that's an entrenched part of the U.S. capital markets business model. And I don't know, if they'll change that, when they'll change that, how they'll change that.
Can you just articulate how isn't that Robinhood's business model then? Is that payment?
Every brokerage firm is their business model, right? Every brokerage firm that you have, unless they have an in-house trade desk to handle your order flow and directly transact, has to go through some market maker. The unfortunate thing is, that the whole, man, how do I say this? That whole system is so, it works to a certain extent, and the kids broke it this last week because those brokerage firms don't spend any money on retail client infrastructure, right? It's like clients are a dime and a dozen. We just churn them and burn them, right? That's still there. And I got to say this out loud. These firms that don't allow people to sell from a long position and lock them up out of their accounts and stuff like that, that's criminal in this day and age, right? With the technology we have, that's like in the old days, brokers wouldn't answer their phones.
Yep.
Right.
Yep.
That's not right.
That's crazy.
Right? You know, to hold people hostage in a stock when the stop is dropping and they can't get out. Now I know everybody goes, you know, the old guys, well, you know what, suck it up, buttercup. That's the way of the market. You know, I don't think, honestly think with all of the technology we have now that we should be a little bit better, because holding people up, it's okay if you don't let them buy. I understand that because there's no product. Like they halted trading in these things because the market makers just didn't have anything to sell, right? And that makes sense, but you cannot not let people sell. That's like a mob Sopranos boiler room where no pink tickets are allowed. You
I
know,
thought they were allowed to sell. I thought it was just buying that was cut off.
no, some people weren't allowed to sell because the
Shorten,
systems,
yeah. But
right?
I know shorting
The
was prohibited,
technology.
but it's insane. I mean, if you buy something, you have to be allowed to sell it whenever you want.
What is the reason? You know, because I've heard Vlad be out there. I mean, the worst communicator I've ever heard. I was shocked. I mean, not only did I watch him on was it the interview with Sorkin, where it was just the worst interview ever. Like, does that company with all that money not have one PR person to train him? And then he was on Clubhouse. Elon Musk was on Clubhouse, amazingly. And Elon Musk brings him in, and he's actually trying to coach Vlad how to talk properly, and he still
Really?
can't do it. It was shocking. I was shocked. And the heart of it is this kid is talking about how, you know, he was sleeping when the call came and how his app is #1 on Google. And I'm like, talk about a total disconnect to
Oh
the
yeah.
customer's needs. Like,
You know,
what the hell?
right? Exactly. You know, I mean,
No
look,
remorse, no
yeah, there's
indication whatsoever
whatsoever,
of any
yeah.
sort of remorse. But what happened there? Like, he's giving two stories, apparently. You know, he's saying something that doesn't make sense. And I
You
know
know,
Portnoy came
don't,
in and said, like, which is it? Like,
you
was it
know,
liquidity? What do you think it
no,
was?
what it was is their infrastructure wasn't able to handle the order flow that came in from people opening accounts and putting in orders. And you know what? Why don't you tell people, instead of making the small print so small that you need an electron microscope to read it, why don't you tell people that they open an account? Don't make it like, oh, this is like all fun and like, you know, like a cartoon or something like
Yeah,
that. Tell
a
them,
game.
listen, man, you know, this is a not a game. And okay, if you're risking $500 and losing it, that's a different thing. But if you're, you know, some of these people are putting in a lot of money and they're
Mhm.
young and they can recover, but still, do we really have to rape everybody still? I mean, come on, you know, like tell people this is, you know, this, there are, you know, sometimes when the markets go crazy, you will get locked out of trading. And that's a time when you shouldn't be trading, right?
Mhm.
Instead of telling people to trade because you're selling their order flow and then you're locking them up and screwing them, right? And then you don't even have the decency, like, why don't you just come out and say, hey, look, we fucked up,
Exactly.
right?
Just own it like a man, you know, like,
You
or
know,
a woman, like, just
like
own it.
like
Just
we weren't
take
prepared.
responsibility. Take
It over,
responsibility.
yeah, it overwhelmed us. We weren't prepared, and you
Yep,
know, and you know, it blew up, right? At
totally.
least people would, you know, because that's what happened, right? Everybody knows that, right?
Oh,
You know,
I think there are some people that don't know that, JJ. And it was confusing in those first few days whether or not what was really going on was something more nefarious. I mean,
well,
nefarious, everybody was saying there was, you know, Citadel was behind it and or
oh,
the government was behind it.
okay.
So
And well, here's the other thing too.
speak to that.
Citadel and please, Mr. Griffin, don't put a hitman out after me, you know, because I know if you talk bad about Citadel, you end up disappearing,
God.
right? But you know, in my day, there was a market maker handbook, and it was thick like a Bible, and it had all the names of the market making firms in it. It was called the NASDAQ Red Book before FINRA. Now, if you looked at that book, it'd be like a 2-page pamphlet. There's Citadel, Susquehanna, Virtue. There is a monopoly in market making. These people have so much money, right? Because they're getting all of the order flow in everything. Plus, he also has a hedge fund which is investing in things. So there's conflicts of interest all over the place, right? And then you have, so you have, and then you have then there's another company, that who shall be named, with Uncle Larry, that's managing what, $9 trillion worth of cash. And then you have the order flow in a monopoly, run by a guy who buys a $200 million penthouse like we buy a pack of gum, right? So the something is not, I don't want to be a tinfoil hat guy, but we need more participants in this market, because last March, when this thing fell apart, Citadel was not absorbing inventory, and the price in this S&P futures was jumping around like you electrocuted it, right? Because there was no price stability, right?
Mm.
And so they just step back and go, oh, you know what, we're risk off, right? And then retail is just completely jumping in and out, trying to avoid a guillotine by taking every trade. We need more market makers. We need to bring back some sort of form of checks and balances for this, because the system has gotten over monopolized. The other thing is, once they installed that stupid PDT rule, they cut all the retail in the market when it was 2005 or whatever. And so the brokerage firms didn't build up their infrastructure and spend the money for smoother order routing and all of that sort of thing. So then all of a sudden they're like, oh, we need retail back in the market because we got to dump all this crap on somebody. So let's give fractional shares, zero commission, right? Let's make it fun to trade, right? Because we need, you need liquidity, because look at Microsoft. It trades what? Or even Apple, right? Today, Apple's traded 62 million shares, right? That's 17 billion shares of stock in that thing, right? Less than 1% of the float trades on a daily basis because it's locked up, right? So there's no liquidity. So this is what makes me nervous about these markets, because these markets are not functioning in a smooth manner. There's too many monopolies, and not the hedge funds, but the money managers are sitting on massive positions, and they're not selling any stock, which is creating supply shortages. And that's why, you look at the S&P, we have a short in the S&P from 2 days ago, and they're just having a dickens filling it because we've got a gap, so there's so many things that just kind of make me nervous, right? And it's like the roaring 20s again.
Is that not,
can you go ahead?
No, I was just going to say, is that not because that's what gets me. I'm like, the whole world is experiencing a virus that has destroyed GDP, destroyed jobs, destroyed the economy. Crazy president. Well, let's not say crazy, let's say volatile president. And then the stock markets keep on going to all-time highs. And I mean, off borrowed money. How?
Borrowed money and no supply.
But I mean, I get that there's these bursary payments or whatever they're called, and people are putting the payments that they get off the government into the stock market. But I mean, is that really the truth, or is that just a story and people upstairs are controlling things?
I don't see any selling. When the largest market in the world stops to a tick on one of my levels and reverses, it's just freaky, right? It's absolutely freaky. I shouldn't be able to trade to the tick in the S&P 500 or in Apple or in any of these companies. Now, I know there's algorithmic execution, and market profile is probably the scariest charting thing you'll ever see, because it's so simple, yet it's so accurate. But the thing is, I think they need, in the old days, we used to sell stock for profit taking. Now they just get loans against stock because there's so much free money, right? It's a little nerve wracking. I want people to make money, but just, have your head on a swivel out there, folks. Right.
Would you explain the payment for order flow so people understand what Robinhood ultimately is their business model?
Okay. See, in the old days, we used to have commission, right? And every time you trade on a stock, it would be either 12 cents or 6 cents a share that you would pay in commission. Then they went to a percentage of the dollar amount of the trade. Then this guy Charles Schwab came around, right, and did the a discount brokerage firm with Muriel Siebert, who was one of the the first ladies of Wall Street, right? And and so what happened was they changed from a commission-based model to this asset gathering model, and so the payment for order flow really helped brokerage firms supplant their revenue because the market makers pay for that order flow so they can trade against it. You know, and that's where they make the big money. I mean, Citadel made $6.7 billion last year.
But just break that down. Just break that down with what the people on Wall Street bets. You know, just explain how most of those people who are using Robinhood, right?
Yeah.
That information is ultimately what that's how they get their information.
Yeah. Oh yeah. And it's okay. Everybody's got to learn, right? I have nothing against people starting out in this business and learning. It's just try and if you're learning, try and learn from a source that's actually done the job, right? That really helps because you can, you know, there's a lot of misinformation out there. You know, there's stuff I saw on Twitter today. I was like, oh my God, what are these people talking about? You know, and there's so much misinformation out there. It's really important that you educate yourself if you're going to do this full time. Now, if you're doing this for some fun and kicks, right? That's not a big deal, and you lose $500 and that's the last experience with the market. That's fine too, right? You know, I don't want to be one of those preachy old guys, right? But if you're doing this, if you're trading now, your audience are traders, right? Your audience are traders, and you know, trading is a skill. It's developed over time. And if you learn the business that makes the chart move, your life is going to be a lot easier. Now, there are people who trade just candle charts based on support and resistance or whatever, and that's great. And if you are disciplined and you use stops, you know, you can be profitable that way too. But if you have a little bit of knowledge about how the system works, it'll really help you from trading at the wrong time, that sort of thing.
So here's what I saw on Wikipedia regarding payment for order flow. In financial markets, payment for order flow refers to the compensation that a broker receives, not from its client, but from a third party that wants to influence how the broker routes clients' orders for fulfillment. It is a controversial practice that's been called a kickback. In general, market makers such as dealers and security exchanges are willing to pay brokers for the right to fulfill small retail orders, since these can be matched more easily than large orders. The payment can be in the form of direct cash incentive, non-monetary service, or reciprocal arrangement between the broker-dealers. So tell us how that is still in operation today for the day traders where, you know, our audience is.
Your order, if you trade, say at E-Trade, gets routed to Citadel, and if Citadel has the stock, they sell it to you. If they don't have the stock, they short it to you. And if there's a whole bunch of you selling it at the same time, Citadel's going to drop their bids and try and buy it as cheap as they can. Once they buy it as cheap as they can and take it into their inventory, they're going to take the market up and resell it to new people. And they pay for that privilege, right?
Yeah, that makes sense.
And that's all that's going on.
So they pay for the liquidity from whoever. They match it by if they can't sell it, they'll just short it.
Yeah.
But I just don't understand the advantage that Citadel would get for shorting something that they didn't have, just for the sake of filling the demand.
Well, that's because that's the business model.
But could they not just say
that's how you make money?
Right? But I know they can short it and drop the price and make money from it that way, but...
No. But I mean, the thing is, also you have to realize that there's two kinds of supply and there's two kinds of buying in these markets. There's inside supply and outside supply, right? And 9 times out of 10 in these markets, we have inside supply. So it's inventory going back and forth. It's a very profitable game, right? In the ES, for example, if you're buying 1,000 contracts at 38.35 and selling them 2 ticks up, you know, that's $100 on 1,000, right?
Yeah.
So, you know, and you do that 300 times in 20 minutes, it's profitable, right? You're always buying and selling, right? Back and forth. It's like a car lot. It's the world's fanciest car lot, used car lot. You know, we sell it to you up top. then, when you're desperate, especially at the end of the day, when markets dump, because we know day traders have to get out of their position.
Yeah.
Right. So that day trade margin is coming due. We know that's gotta get out. So, we'll drop our bids and take you out at the low.
Yeah. Pretty crazy. Pretty
All right,
mind-blowing.
so I have a few questions here that were up on YouTube, so we'll probably wrap up with these, JJ, if that's okay with you.
Sure.
One of the things here, somebody asked about toxic financing. How do they time the filings and unload the paper?
Oh, how do they time it?
How they time the filings and unload the paper?
Geez, that one is kind of tough. It all depends on the circumstance.
Okay. The other question is, how can you know when the float is all bought so that the market maker restricts demand?
Just take a look at the SEC filings.
Can you see it there? Can you? Because I see it because it skips up on air. The stocks with a big float skips up.
Yeah, it's in that instance, don't try and do too much float analysis and really trade the price action.
Okay.
Yeah.
Okay.
No. Yeah. Just trade price action.
Sometimes information overload
too much,
will.
All right. What is a market maker's favorite time to exit their position?
They're always exiting. They're always buying and always selling.
Okay.
But who's the dump though? The dump is whoever the promoters are who've pushed it up. The promoters are dumping in the mornings. Is that right? Who's dumping the liquidity in the mornings?
Yeah.
All right. Is there as much manipulation on day 2, day 3 runners, or is it just day 1 gappers?
There's always the business model.
Okay.
Right? There's always business going on. People call that manipulation, but we're always buying and selling and making markets. And so that's continuous. There's never a day that just stops.
Okay.
Always
what percentage of daily volume would you estimate is market maker manipulation? And what percentage is real retail investors, traders buying, selling stock?
Well, market makers take the other side of our trades. So that I don't know the answer to that.
Okay.
Right?
You know where the confusion is though? Just sorry to interrupt, but people think, and I've thought it as well. I thought when I bought, I sold to another person. That's just what I assumed. And the transaction is just between you and someone else, whether it's a hedge fund or a person. That's just what I thought. But what you're saying is that you're buying and selling from a market maker and they're just managing it all.
Yes. They're managing the order flow.
That makes sense.
There is a source, especially in a public company. There's a source of that order flow, right? And that goes to the market maker, and the market maker is just, like I say, handing you the donut. They don't make it.
Yeah.
Right? They don't make the donut. We just hand it to you, right? On that. And then, and then we buy back the donut when you're tired of it.
All right. Is there a hierarchy of factors to account for when trading volatile hot sector stocks? What is the most important and what is the least important when selecting an entry?
Could you repeat that? I'm sorry.
Is there a hierarchy of factors to account for when trading volatile hot sector stocks? And this follow-up question was, what is most important and least important when selecting an entry?
For me, selecting entry is all about structure. The market leaves a structure, and I don't use candle charts. I use these TPO charts to tell structure. So I can tell the market's telling me when traders are trapped long and short, and then I'll take the trade counter to that.
Okay. One question, I don't think I asked this earlier. How is it possible for 121% of GameStop's float to be short?
It was the pre-shorts. The pre-shorts was already.
Gotcha. Okay,
that's the pre-shorting.
Good. And then, one person had put in, since markets have changed from the 90s and we have algos now, how is your experience to today's market still relevant?
The business model hasn't changed. Technology just helps.
Just one question from me. Someone wrote, how do you spot when the good criminals are in the stock, and good criminals with inverted commas?
Because the chart looks nice and it's well developed, and they take their time and they build it. They take the stock up and down
That's so true. Those VWAP holds in the afternoon,
Yeah.
stuff like that. Perfect consolidation. Perfect.
Yeah.
So where can people find you, JJ, if they have questions?
Well, I'm VWAP Trader 1 on Twitter, and our site is microefutures.com. That's where I teach every day.
And right now you're really working with retail day traders, aren't you? And mentoring them.
That's all we're doing is, working with that day trading community, trying to keep them alive so they, they have a shot. If we can keep you alive long enough till you start being a little bit profitable, that's the tough thing, because a lot of people with small accounts, you got to focus on the learning before the making the money. It's just like surgery, if you want to do brain surgery and you haven't taken basic anatomy, you're going to be cutting at the ankles.
And how do you apply to be the next people who do the billionaire thing with the OTCs?
Oh God.
When's the next class?
Oh man, I'm retired. I'm not creating any more monsters. That's it.
I think Steven wants to be a monster. He wants to sign up for that class.
I get into this room and I start teaching trading, and they're like, tell us about this, tell us about how you did this. So I'm like, no. Like, tell us how you do a deal. How, it's like, oh God, it's like, no, you guys.
Like a secret recipe you don't want to share anymore.
Well, no, it's just, it's just such a weird thing. It doesn't really help people's trading. I just tell stories to keep people. What I do is I make jokes and I tell stories in the room when the market's choppy, and that keeps people from taking trades. So
that'll do it. Put the fear of God into them, and that'll keep them keeping their hands still.
No, scaring them doesn't work. If you make them laugh, they won't execute. So that's good.
Good point. There's probably a slew more of questions we needed to ask today, but I'm still trying to unpack a lot of what you said. How about you, Steven?
Yeah, no, better understanding. I'm probably going to listen to this back and watch a couple of videos, but I think we're nearly there. And hopefully the audience is too. We're educating episode by episode.
And I got a new nickname for Steven. I call him Home Alone, because the first time, some of the stuff I said, his face was just like, I'm like, oh,
it was like the kid on Home Alone.
It's like, oh my God, what have we done to this poor guy?
Well, I think Steven knew it, but I think that expression of shock was like, it was almost shocking to hear that, yes, you were right all along, that there was stuff on that other side.
The business model hasn't changed, right?
No. I just couldn't understand how it could be legally done. But then when you kind of explain it and the processes and how the bigger system works, then it starts making sense.
Well, the thing about the U.S. Securities and Exchange Act of 1933 is that if you declare what you're going to do and put it out there, and it's legal. So if you say, I've got 100 million shares of stock, here's where I own it, you're going to buy it, I'm going to sell into you, that's perfectly legitimate because you've disclosed it.
But the whole creating a story around a company, but I mean, who's to say that the story's not true? That's where the gray area lies in that.
Right.
Yeah,
that's true.
Yeah,
that's questionable, right? If you have a strategy to create a company with the sole purpose of just raising money, that's not like Nikola. But then Nikola did it, NKLA did it with the truck that had no insight.
Oh yeah.
Then they didn't get sued. They got bought by GM.
Yeah. It's I've seen crazy things, I've seen crazy things. Some of these things actually work out, I just
what's your prediction with regards to, let's just say for Wall Street bets, what's your prediction with the power of the retail investor?
Well, I think the retail investor should exercise their power. And one thing I'm going to tell these people, the people who say they're never going to sell, right? Guess what? You're a shareholder now. You have rights, and hold your CEOs accountable, and make sure they're not spending 10 grand on a shower curtain or spending your shareholder money,
frivolously.
Yeah, exactly.
Yeah. And what do you say though to those who are looking at platforms they want to be on instead of Robinhood, for those that have pulled out of Robinhood where would you point them?
Oh boy, I don't really know because I don't trade equities.
Yeah.
You know, because I just trade futures now because it's just more relaxing. But there's got to be good places to trade right now. I haven't had any experience, you know, with them.
Trade Zero is pretty good. I mean, we just had
firms.
Dan, the CEO. We had Dan on here, the CEO. Trade Zero is pretty good for America, and they've got an office in Bahamas. So it's pretty good for international as well.
Yeah, just the only thing is I'm careful about offshore because the regulation and oversight is just, you know, just here's the thing. Any brokerage firm is great, but, you know, take your money out. Don't leave too much money in them because I've seen crazy things happen, right? You know, don't leave too much in there. Leave enough to operate, but always be taking money out of there.
JJ, we're probably going to have you back on because I'm sure both Stephen and I are going to have 100 more questions in another couple of weeks. So if that's okay with you, we'll have you back on. And thank you this was a very long session today, but we had a lot of questions. I knew Stephen had questions that he had gotten off Twitter. And we're both still unpacking it. But I think the biggest blockbuster for me, Stephen, I don't know about you, is that perhaps what we saw with Robinhood and Wall Street Bets is not the real story. That is the piece.
Same.
You know, nothing ever is in this business.
Yeah.
Right.
Yeah.
The way the thing about this business is, as old Kramer says, you know, we can't do anything remotely resembling the truth. Right. You have to build your own truth. And that's what these guys do every day.
Wow.
Okay.
All right. Well, please let us have you back on. And to everybody watching, Stephen Johnson and I today, thank you for all your questions on YouTube. We did read through them and hopefully we got most of them addressed today. But if not, you let us know what other questions you have for JJ and we'll have him back on. And just give your Twitter handle one more time, JJ, so people can find you if they want. It's
VWAP Trader 1. So VWAP Trader 1.
Beautiful. Awesome. Thank you so much for today. And we're going to say goodbye to everybody. Be careful out there and take good care of each other. All right. Aloha.